big cap tech leading the charge next week. I mean, there's a lot to deal with. And then you have, as I said, the expiration coming today, too, which could be interesting into the close.
Yeah, it is interesting as the number hit the tape today. And I said, well, it's stronger than was anticipated. Is this going to be good for the market or bad for the market? And you just don't know. And that's often the case, in times like this, is that, okay, is it going to be interpreted that the economy is resilient and that's going to push the Fed to do more? Or is it that it's resilient, it doesn't matter what the Fed's going to do, that there's a segment that's going to work? I still am in the camp that inflation has hit that stubborn area where gains in terms of going lower are very, very tough to come by, and that the Fed's going to have to keep going. We see the strength in corporate earnings, but it's also interesting that in the corporate earnings, some companies that are beating and even raising are getting hit. So people are looking to take profits. I still believe that we're in a bear market and it's going to go lower.
Jason Snipe, how do you see it? Jenny, sent around something or tweeted it yesterday about being emblematic of all of the cross currents that the market is trying to deal with today is so relative to that. You don't know what to make of the data. Is it good? Is it bad? Is the Fed one more and done?
Yeah. So I think to Steve's point, the bias is downward. Right, there's absolutely, I think that's the case. We started off with banking earnings, which were solid, and we're now getting into the other parts of the market, which we'll really get to see what's really going on. The beat rate has been around 72%, which is roughly in line with what the historical average has been. So I think with the Fed still looming large, they'll make a move in May. I think now the question is, will there be another hike, and how long will they stay at these levels, and what the terminal rate will be? Will it be 5%, 5.25%, 5.5%? We'll see.
What happens if May is it? What happens? Does your view of the market change?
I think if May is it, I think that's a positive. I think likely they'll still stay high for some months, but I think that'll be a positive to really put into focus that, hey, look, we have seen some of the data. There's been lingering lag effects. We're seeing job data. We're seeing all these things and we've seen obviously some other macro data that's been negative, Philly Fed and all that. So I think that would be positive for the market.
Jenny, Bank of America, their flow show today says you should still fade 4,200 on the S&P. They say, quote unquote, sell the last rate hike. Higher unemployment equals higher credit spreads. And I do wonder if that last hike is a sell the news event rather than something to rejoice over. And that's going to be really interesting to watch on May 3rd and thereafter.
Well, and I wonder, too, if the market sustains at this level, right, or goes higher, then maybe it is the time. But if we anticipate negativity because everyone just all they do is try to get ahead of everything. So if ahead of the May rate hike, people sell off and the market were to trade down a lot, then I think that game changes. So we need to stay flexible. But I'm with you, Scott, completely on this. It just doesn't feel great. It's almost impossible for me to make an argument for the market to go higher than 4,200 or 4,300. I'll stand by all day long that it's a stock picker's market, and I can always find individual things that I'm enthusiastic about within that. But I can't put together any picture where even if we get to $240 earnings, we put an 18 times multiple on it. Like, I can't get to anything better than that. So yeah, if we end up around 4,100, 4,200, and the Fed hikes by 25 basis points in May, like, what else are you going to do?
Well, you wonder where earnings are going to go. Weiss, Barclays, how low can estimates go? Forward estimates are due for a reality check, they say. Markets are pricing in a near perfect landing, according to UBS. They doubt that's going to work out so perfectly. Wells Fargo, we see a rough mid-2023 for equities. I mean, so you still have this no man's land market. I traded, text with somebody we all know. It was like it's hard to make money in this market. It's hard to be long. It's hard to be short.
100%.
You don't really know what side of the boat to go sit on.
Yeah, I think that's absolutely right. And so there's a great alternative. And those, for me, that's the 2-year. And it was a 6-month, but those are getting, called away, so to speak. They're mature. So if I can pick up foreign change, if I can pick up 5% in some other instruments, I'm happy to wait there. Look, estimates are going to come down. And even if the Fed, to your question you asked before, and your point you made, is to sell the news on the May 3rd meeting, the hike, Yeah, I think it is if the market goes up because, again, the Fed tightening cycle is just starting to hit. We're seeing that now. First real indication, the mismatch that SVB had. But that's not a broad indication, right?